Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And the odds are that you're watching this video because you got an email from me telling you that it's up. And if you're not on my free email list, go into the description of this video and there's a link to get it. Then you'll get my free pre-market stock market news alert digest. Now, today, Monday, the 5th of December, the stock market took a hit. Of course, it was down. Friday, what do we make of this situation? Well, on the short term, meaning the rest of this year, I don't think stock market bulls really have that much to worry about. There's one thing they need to keep their eye on. I'll show that to you in this video. But first, when we see the headlines today, the Dow, it fell 500 points. And every single time the market has, a pretty good down day or up day, people always focus on that daily action and draw a lot of meaning out of it. And if the market had been up today, the sentiment of the news would be extremely positive, but it was down. And what we find as a result is headlines like this. Stocks are likely to get smacked down in the first half of 2023 before markets improve. The down day makes it so people worry about the stock market declining. In a way, this headline is reassuring. It's telling you that, well, markets will improve, but it is predicting a decline in the first half of 2023. Actually, as I explained in the video the previous to this one, and you should watch it if you missed it, I think the opposite's going to happen. I think the markets are going to do pretty decent in the first part of next year and then run into trouble. It's much different than I think what the experts are expecting, but you have to watch that video to understand why I think that. And I'll link to that in the description too. But the thing is, this is what I think you got to be worried about. And there's no reason to worry at the moment. That is what the bond funds do relative to the S&P 500. And this is TLT, the most heavily traded treasury bond ETF. Now, it's been rallying since October, along with the stock market. Most this year, and really starting last year, the opposite happened. Bonds were going down, and then the stock market would go down. And in March, when the stock market rallied, bonds did not rally. They did not confirm the rally. You want to see the two rally together, and they've been doing that since October. However, if the bond funds such as TLT, LQD, GA, and K, if they start to go down and the market continues to go up, that would be a huge warning sign that the rally is going to lose steam and the stock market is going to drop. That actually happened in the first half of August. Before the stock market peak around the Jackson Hole meeting, this ETF and the others were declining already. And it's a huge warning sign. They're not doing that now. And I think I think the odds are these funds will continue to do okay into the end of this year and probably carry over some into next year. The last Federal Reserve meeting in November, this bond fund went up after the meeting and it went up until now. Now it's down today, but it's not down enough to enable us to say, look, the rally's over, these things are going down. It probably, in reality, it's probably not much is probably going to happen with this ETF or the other ETFs this week, maybe not even next week. So there's nothing to be, this is the thing that you got to watch as a bull, but it's not flashing a warning sign now. So in that regards, just because the stock market was down, the Dow down 500, I wouldn't worry about it too much. We need to see these funds form a negative divergence to be worried. And they're not doing that right now. It take time for that to happen. It's probably not going to happen, hopefully, into the end of this year. So that's my view on today's action and why I'm not too concerned about what happened. Now, when we do look at the S&P 500, Look, we rallied into the 200-day moving average last week. Historically, in a bear market, that's a resistance level. And you can see in March, the markets just went above it for a week and then dumped. In August, it only went up, same thing, a week, and then it dumped. Here we are. We closed above it Friday. We went back down today. It's resistance. I think the market's taking a breather. Now, I am optimistic that it can rally through the highs of last week before the end of this year, but it's got to form some consolidation and prepare the way to do it. So that's basically what's happening. I don't think there's much going to happen this week in the markets because of this overall setup that we're seeing in averages. So that's my take on what you saw today with the Dow down 500, why you shouldn't be that alarmed because of that. If you like this type of analysis, hit the like button. This is the first time you see me on YouTube. Hit the subscribe button, hit the bell next to it, and YouTube will send you an alert as soon as my next video is up and for you to watch.